My name is Elizabeth Bunzo. I'm an investment promotion specialist from the Tanzania Investment and Special Economic Zones Authority, which is a government organization newly formed from July 2025 after the merging of the former Tanzania Investment Center, TIC, and the Special Economic Zones Authority, EPZA. Our mandate still remains the same as an investment promotion agency in Tanzania, that is to promote investments, to facilitate investments, as well as to advise the government on all matters relating to investments in Tanzania, and to be invited in such important conferences that extends our scope in regards to the traditional sectors that we're used to. It's a very, very important platform for us, and we take this with high priority. The moderator that previously wasn't on the stand, well, they're telling me like, apologies, you're taking a long time, and thank you for your patience. But this shows the priority of the governments that we take when it comes to fit test, that we take when it comes to SADAs, and that's what we're here. So coming to you, sir. I was told to moderate this session, and I wanted to have like a very brief conversation with you, more interactive, as well as you can ask me questions because I'm also a government officer. But I wanted to ask you, how can you lead the role of DSE to fintech development, and also how can BSC facilitate financing when it comes to interest in Tanzania?
Okay, thank you very much. So once again, for the benefit of those who may not be familiar with me, my name is Peter Aditonela. I'm Chief Executive Officer of the National Stock Exchange. And just a little bit of background, it would have the expansion question a little bit. The National Stock Exchange was established in 1996. It was established on the back of exchanges that we go to as a country, moving from a socialistic government through the centrally control to establishing a market economy allowing private citizens to own part of the economic growth. And a lot said that they have been made a decision that instead of controlling all these state-owned entities, some of which the business entities of the professional nature, that they should transform these organizations, take them public, and then allow the Tanzanians to be part owners in this. And the strategy from up to this was that they gave the strategic investment was most of them, even though they were monopolies, they were struggling. So turn the business around, take it public, allow Tanzanians to buy shares. The first company that was listed was Tanzania Accept Limited, which is on Locas's. It was listed in April 1998. So a corporation of September 1986, so it had 30 years this year. The first listing in 1998. Since we brought in 38 companies, 22 are Tanzanians. The total market capitalization of 24.3 billion shillings. And the other 6 companies listed, all of them happen to be for Kenya. We from the list in the Nairobi Stock Exchange. And the total market capitalization between the Tanzania and foreign companies that form one period. And we do have the exchange also with the other securities such as government bonds after the payment auction of the BOG. We have number of corporate bonds, and we have to be reunited as the sustainability bonds and Sukuk as well. And or recently was introduced a new asset class for exchange traded funds or ETFs. The first one came in October last year, and the next one came in January this year, and there's a lot more coming. Regionally, in terms of market capitalization, we're the second in East Africa after Nairobi Stock Exchange, and we're part of EAC, we're part of the East Africa Securities Association, but also Tanzania be part of SADC, we're part of the association, the SADC Association, which of course is highly dominated by Johannesburg Stock Exchange, but we are among the largest other than is the takeaway Johannesburg, and Mauritius is not as big, but it's a more vacant because of the age they cover. And on the equities board, that's where you list companies and shares. We have multiple the main investment market, which is where basically short pens corporations you had NMB, CIDPs, imported firms are listed, which is a majority of our companies. and the requirement to list in that window at the port is that you have to usually pay a paper from 1 million Tanzanian base. So around 40,000 US dollars from Seika. And you have to have 25% of your shares voted to the General Party. So if it's a company that is started, it's a private company, take it public, you can see which has 25 drops 35. Then we have the what Alex said is about the alternative segment of the market. Here about the enterprise group market. Here there's this onerous requirements. Another thing I should mention about the investor market, you have to have at least 3 years of profitability consecutive. So you have to have existed for this 3 years for 3 years cost. What is it for long ever profitability for 3 years? On the enterprise growth market, you only 200 billion. So I counted media shadis of which we paid a capital so over $80,000. So not that much. The number of fintechs, so number of fintechs in this book that have that kind of valuation. It's you don't have enough history of existence, you can be a startup, and a number of fintechs to live that space because it's an emerging area. So number of fintechs you have to start that so risk to establish. So that video is available for them because you don't have a history of existence. You can be a startup to the first day at the quarter. If you're a startup, then you have to be locked in as a founder for at least 3 years. Additionally, even if you're registered for longer, you don't have to have that profitability record. So if you made losses last couple of years, we can still come to the enterprise growth markets. Of course, the requirements are same as saying DPC approved. We'll check that you're bringing something that is a dead horse to the market, and only through videos I can make people host their mind. So there are a lot of opportunities for fintechs that have already been established on to raise capital. So you get that through the first market if you've been there for a while, you want to increase your capital levels. If you're the top head, of course, because we're not fintechs, so look time to think about the smaller tiers, the startups, but you do have large interests because for all intents and purposes, you are raised by assets, etc. Have fintechs as well. And you can also have, for example, fintech that previously was funded by private equity in the financiers want to exit. That's in the available windows where you can take the company public to the exchange exit. So the number of features is that big fintech existing. You want to go public to increase your profile, etc. The main investment market is available. You are a smaller fintech, maybe you have a big post up, we're still taking your feet, or your setup, you can come to the enterprise growth market. You can also, if you are a founder or a venture capitalist and is a vetted fintech, you can have an exit mechanism through the exchange to get a. And last but not least, we also have a non-credit segment, what we call the ESC, accelerated enterprise exchange segment. This segment is whereby you have any company, risk or just for you to say companies that you have SMEs that primarily, and you want to work with financing either for credit-based private capital, banks, etc. You can come work with us. We can help you profile your company, put it on our website. We're developing a new system working with a fintech from Zimbabwe, Fintech, which will help applicants put their profile in, or review it, onboard it, and then also financiers can come in, look at available investment opportunities. And that is not for ready. So these are not shares you'll see advertisement, but I can come in as an investor, say, oh, interested in this company, this really, what do they do? Can I meet the farmers, look over their books, etc., and then make a decision about it based on it.
Hey, Peter, I'm really impressed. I also didn't know the information that you just said. I didn't know about how well DSC facilitates fintech startups. And there's something that is similar. I could just also give some information. There's something similar that you do that is also available and an opportunity for other investments and Fish Economic Zones Authority, which is to market those projects. We do have a very free platform that fintech startups can submit their projects to us. Since we have different platforms that we go around, be it regionally and internationally, we market investment opportunities in Tanzania. That means they can also have that platform for us to market their projects so as they can link them with potential investors, be it by financing or by joint venture partnership. So we call on fintech startups to also submit those projects to us so that we can lead you with potential investors. Now, Peter, maybe on or perspective, what are the challenges that uh, hackers access to finance at fintech startups? And what is your view? Like, what do you propose to be done in response to those challenges? How as the government can facilitate need for them to be linked with the financing opportunity?
Okay. One thing I'll say about fintechs and Yagro, but by extension also speaking more about startups. But so happy, the was yes so happy is that a lot of the startups, at least the one that are average as on a person up, I remember to be fintechs. The one thing that such a particular fintechs have, like most other businesses, is that they are ready to go out and look for funding. They're ready to invite other investors. Whereas traditionally most small businesses, particularly part of the world, is stuck with the own savings, family and friends, etc. Start a little bit, go borrow. Sometimes you also at a point you even borrow from a bank which is rated cheaper to go borrow from a lot shark, which actually they need to imagine and saving. So this the good thing is startups and fintechs in particular are happy to go look for other forms of capital. That said, the challenge is valuation is still a challenge. I believe most farmers in this form would agree. Initially, when you look for a true series of funding, it comes at quite a bit of a premium to the intake to the startup. So you know like a company with $10 million, someone comes in asking for 40% equity, but they don't want to budget for $4 million. So the answer challenge usually getting through that initial stage, and that sometimes destroys the willingness. They kills the willingness. It can also kill the margin to the business. The second is also just give the understanding that maybe finances have of these businesses. And what it's about to the pressure as what can they get can do through a series that says that what can decision that they seem to by help it cut from give it this businesses a wider audience. We can help them reach out to more investors, which give them a bigger pool of funding to choose from. Whereas it reduces their cost the care evaluation. But also, sometimes it's not that the investors want to be unfair, but it's that they want to take the risk, but they're putting a bill up because they don't really trust you 100%. So that's when the evaluation comes out the way it does. But if they see that this fintech has partners with DSC or TCESA, it gives them a lot more confidence that, okay, the government is behind this business, the ESC behind this business. Because if you had trust, you will just put the portal to you and then you just say that we will also build the first count of due diligence